Yeah, let's try this one. Yeah, strange software glitch. The other YouTube stream just didn't appear in my stream feed. Wait, it's still not working. Connect streaming software. It is. Maybe that's the old one? Wow, something is Wow, something is massively wrong with the software today. What the heck? Okay, wait. All right. Totally strange. Now it's doing this one, which is the one I couldn't see. All right. Yeah, I was loud and clear, but I'm streaming to a different stream. I'm not streaming to this stream, but it's streaming here. Okay. All right. Yeah, well, let me finish my tequila. That's such a weird glitch. All right, let's find out where the music's coming from. There it is. All right, all right, all right, all right, all right, all right. Let me put down the dystopian. And let me turn that off. And let me turn that off. And let me turn that off. And I guess we can have that. And then I bring this back. And all right, now are you ready to go? Wait, so it's funny because I have to have two windows open. One with the actual YouTube stream so I can see the chat. Because from my point of view, I'm streaming to a different channel and there's no chat because nobody's over there because there is no other channel. Cool. So anyways, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right. So today, in just a few hours, we are doing the monthly Council of Investment Advisor meeting. You might have received an email inviting you, but if you're not a member, you won't be able to log in. My apologies for that. But what do we do at the CIA? Well, about 18 months ago, I put in $50,000 real money into my real investment account at a real Wall Street institution under my corporate pension fund. So I put in 50 grand. And we built and constructed a portfolio to produce low volatility and high income, because this is money that should last forever in perpetuity. Cool. 18 months later, we've done very well. We definitely lowered volatility. In fact, during the big crash that we had recently in the stock market, way back in March and April, we were beating the S&P 500 by 7%. Cool. Now, why is that a big deal? Well, that shows it's lower vol when things are horrible, which is good. But we earn nearly 14% in income, cash in the money. It's like, yes, we bought an apartment building, but we collect rent every month. Yeah, well, I collect rent every month. So anyway, so if you want to learn how to construct a low risk, high income portfolio, let's say a retirement account like mine, if you want to learn how to manage portfolios, because I advise multiple endowments. In fact, I have a meeting coming up with a university to advise their endowment. Cool. If you want, so it's portfolio construction and management. And I updated so that there's a couple other membership choices. One of the first things you'll have to do is watch about 20 hours of videos. Yeah, but we have a meeting in a few hours. So if you want to check it out, now the one major benefit, I mean, there are many, but the one major benefit is like we're trading real money. You're an advisor on my council. So my track record is your track record. Yeah. And our track record is astronomically good. So all of a sudden you can tell people, well, you know how to build and construct portfolios, you know how to manage. So today we're going to rebalance and allocate. So you know how to manage portfolios, you know how to construct portfolios, you know how to work in a board environment. And since it's real money, this is now your performance. So it's pretty good if you ever want to be a money manager or an advisor. The thing is, if you quit, you can't join again. That's it. It's forever. You can come in, you can steal my portfolio. You won't know how to manage it, and then you can't come back. It's simple. All right. So, anyways, that's happening. That's a good day. Okay. All right. So let's move over to the next new thing. Cool. So we're going to use TRADARS and Trader's Way. Those are our tools today. And we are going to start with the euro dollar. What? Maybe not. Let's get a news update first. Factory orders and jolts highlight the U.S. economic calendar.
Brazil industrial output, MOM, meets forecasts 0.1% in April. Brazil industrial output, year over year, registered at 0.3% below expectations, 0.2% in April.
Crypto today, Bitcoin's downside risks escalate as BTC spot ETF outflows extend. Mixed sentiment in world markets.
Euro short US dollar dips below 1 points 1400 ahead of US factory orders and jobs data.
Mali halts artisanal gold mining from June 15th to September 30th.
Gold eases from almost 1 month high ahead of US jolts data, more Fed speak. FTSE 100 up marginally in cautious trade. US dollar Swiss franc returns above 0.8200 wallets, with the dollar appreciating as risk aversion eases.
Cool. Now we'll do euro dollar. Okay, what do you think? What do you think? Are you bullish or bearish? Just type it in. The polls are too slow. When I post polls, for some reason, it takes 4 minutes for somebody to put up, down, or sideways. So maybe you can just type it in faster. Plus, I have to create it. you know. Euro dollar, what do you want to do with it today? Today is going to be the day. Okay, so here we go. Let's take a look at euro dollar. 15-minute. Okay, let me show you. When I go to settings, I'm only looking at reversal patterns. It says Fibonacci, but they're Fibonacci reversals. They're harmonic. There could be inverse head and shoulders. There's a lot of different things going on here. And chart patterns will show things like uptrend, downtrend, or sideways trend. Okay. Cool. Who did you miss? All right, so let's take a look. Is there a reversal pattern, trend pattern, up, down, or sideways on a 15-minute chart? No. On a 30-minute chart? No. On an hourly chart? No. On a 4-hour chart? No. On a daily chart? Yes. So this is a harmonic pattern. It says it might be forming. We don't know. Okay. Even if it makes a lower low, okay, it's suggesting more up than down. Okay. And so we are actually trying to head up here right now. Okay. So many of you said you were bearish, but there's no bearish pattern right now. In fact, the only reliable, repeatable pattern for euro dollar is on the daily chart, and it's not bearish. That's all this says. Not bearish. Even if it fell, it would be eventually bullish. So you could, let's say it did roll over. Let's say it did roll over and we didn't make a higher high above C. Let's say we kicked off this moving average. Okay. Well, then you can say, yes, it may make a lower low relative to this low, but it won't make a lower low relative to this low. And the actual pattern would suggest long-term up. So short-term short. And by short-term, since this is a daily chart, it's like, yeah, okay, it could fall for a week or two. But on the long run, it's bull. Okay. Kind of neat, right? Yeah, totally. Now we're skipping the fundamentals, of course. So there's other ways to do all of this. Because a lot of people will log into YouTube and say, Wayne, what do you think of euro dollar? Such a silly question. But whatever. This is what I think. Okay? That's what I think. Cool, right? Yeah. All right, let's get over to the S&P 500. What do you want to do on the S&P? Please let me know. How do you feel about the S&P 500? Okay. Are you confident? Are you not confident? Talk to me, Goose. Are you a bull or a bear? Okay. So let's take a look and see what is logical based on quantitative analysis. Let me zoom in a little bit. Just a little bit easier. I guess I can pop it this way. Okay, cool. So this is what we think logically. Yep. There's that negative PMI, not good. Institutional positioning, all that kind of stuff, very good. Okay, great. So we're looking at all kinds of things. 2-year yield tickling 4.0 again. Okay, okay. So Andreas and some others are bearish. Some are neutral. Okay. But quantitatively, this is bullish. It's less bullish than yesterday. Can you see that? Yeah. Cool. Okay. Cool, right? I guess I can't be full screen. Yeah, that's what we think. Okay, that's what we think. Remember, some people log in. Wayne, what do you think about this? What do you think about that? Well, that's what I think. That's what the data suggests. Cool. And now we can say, all right, so what if we were only bull? Do we have any bullish patterns that are either bearish reversals or bullish continuation? And on the hourly chart, okay, it's bullish with an opportunity. On a 15-minute chart, it's bullish with an opportunity. On a 30-minute chart, it's bullish with an opportunity. On a daily chart, it's bullish for now. And on a 4-hour chart, it's bullish with an opportunity. Yes. Yes, baby, yes. All right. How do you feel about the pig dog? How do you feel about the big dog? Okay. Big dog. Pound yen. The beast. What do you think, huh? Are you a bullish? Are you a bearish? Do you love it? Do you hate it? Are you indifferent? I know we did this yesterday, so really you shouldn't have changed, but let's see. Yeah? No? Going to give you a few more seconds. Not sure why you wouldn't answer. You're going to learn by not thinking. You're going to learn by hiding. Doesn't make sense to me, but whatever, you do you. Okay, so let's see what it says. What do we think about pound yen? Okay, we are slightly bullish. In fact, I might even change that to be negative. Wait, no, this doesn't line up. Pair has a score of 5. Pairs over score dropped by -3, so that's right. But this isn't right. So interesting. So what I believe is true, that this is a 5, and it drops. Okay. The other thing that I teach, just double check this over here. Let me double check. Yeah, pound yen is a 5. And one of the things I've been teaching is, okay, you have the overall score of 5. Yeah. So it's a 5. And you're like, well, I only buy that. That is true. You could do that. Yep. 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 The other thing I teach is that you look at seasonality. So seasonally, pound yen is down. Now, I already did this like an hour and a half ago, and there's some really interesting data. If you do a deeper dive than I'm doing now, you see something else very interesting. You see something very interesting. But, hey, man, you should be a member. I'm just showing you pound yen. I don't need to show you anything else. We've already done all our hard work. But anyways, pound yen seasonally is usually bearish. Huh. And technically it is bearish. Aha! And so you can be a bear. Oh, for sure. All right. So anyways, going down out to here, if you look for up, down, or sideways or reversal trends, there's nothing on a 15-minute, there's nothing on a 30-minute, there's nothing on a 240-minute, and there's nothing on a 1440-minute. There's only one reliable, repeatable pattern. Remember, up, down, or sideways trends, but there's more than one for each. And then reversal patterns, and there's more than one type of reversal pattern. So we're looking for maybe 10 or 12 of the most reliable, repeatable patterns quantitatively. And of them, we're looking for 5 different time frames. So now we're looking at dozens and dozens and dozens and dozens and dozens of patterns, and only one exists. Wait, so we're looking for, let's say, 50 different things, and it takes us 5 seconds. Yeah. We're looking for 50 patterns on 5 time frames. Boom. That's it. That's all there is. Okay, so what do we know? It's bearish, and you already missed your opportunity at the London Open. Maybe there's a further continuation, but we don't know. Maybe off the psych level, maybe this, maybe that. But so 7 hours ago, so that's even, yeah, this is pre-London. We are at the top here, and we're heading down to here. And we already got down to the bottom, respected our bottom, okay? Because this bottom was projected based on this. Oh, look, it worked. Yes, it's called technical analysis. So you've already missed that trade, okay? The trade sell here, okay? Target that. Now, what could you do further if you want to continue to be a bear on this sucker? Well, you have 2 choices of what you can do. It's not a tough decision, as you can see. I can blow you away, or you can ride with me. Say to ride with you if you can get me to the bottom. Whoa, whoa, whoa. Sorry. All right. You can sell the moving average, or you can sell the top of the range. Hey, yo, you know this kid? Said I didn't, but I know he did. Said, get ready, because this ain't funny. My name's WMD, and I'm about to make money. Anyway, pulled out the Swissy and aimed for the sky. Yeah, so we covered that in great detail earlier today, too. So anyways, sorry for the 80s rap. I just couldn't hold back. Hey, I got music in my soul. Soul man. All right, so what do you think about the oily stuff? My oh my WTI, huh? How you feel about the oily? Oily, oily, oily. Oi, oi, oi. Okay, my oh my WTI. Love it, hate it, indifferent. Okay, let's take a look. Boom! Shalaka lucka. All right, oil. It's got some bid. Oil. Wait, are all of these off slightly today? No, oil is 5. It's a 5. Okay, that works. All right, so we were, right? But maybe that's off. Yeah, something's off, huh? Yeah, that's all right. You should do your analysis. You should never take anything for granted. You should look at this and think about it. So we will be doing an audit very, 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 very soon. They're very big projects, takes a lot of time, takes a lot of money, but we are in the process of setting that up during the slow period of the summer and double check all of the millions of tables that go into this. But anyways, this says 6, this says 5, this says 5, so it's 5 or 6. What's important is we are bullish, and we are less bullish today than we were yesterday. Okay? You should also be preparing for down, 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 down. Has that happened yet? No, 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 no. Okay, right now it is bullish. Okay, great. That's our linear projection, but it doesn't look at support and resistance. It's just a linear projection. Okay, it's a continuation of the slope of the mean. Easy math. You learned it in 7th grade. Okay, cool. So we can be bulls, and now we want to look for bullish patterns. Remember, these are just bullish patterns. It's not all of your analysis. You should see, are there bullish patterns? And if so, if you're a bull, you can engage. But you should also do technical analysis to see where the resistance is. And if you go here, you say, well, at some point, this resistance could lead to a reversal. A reversal sometime soon would be normal. So wouldn't that occur somewhere around resistance? Yes, so you still need to do your analysis. But this is the quick and dirty. So now you can look at reversal patterns in all their glory, trend patterns up, down, sideways in all their glory on 5 time frames. Great. So again, that's dozens and dozens. What do we see here? Consolidation with the potential breakout to the upside. Okay. Target somewhere between 64, 65. So what if there was resistance at 64, 65? Then you should be prepared for that. Does this pattern suggest this? No, it does not. It says if we were consolidating, lower low, higher high, right? And then if it broke, that would be likely. Cool. But you should take it another level and say, well, that might occur, but if it reverses at the higher time frame here, oh my God, this could be down for months. Not days, not weeks, potentially months. Why? Well, we have the data. Okay, if you don't know why, you don't know how to trade. Sorry, I know that's a bitch slap, but it's meant to wake you up, not to insult you. Okay, what about this on the hourly? See, that's just a 15-minute chart. What about an hourly? It's going to wimp out at 64. Whoa, what? Yeah, even if it goes up to 64, that's what this pattern suggests. Okay, this pattern is only forming. It hasn't formed yet, so it's informative. That might happen. And if that does happen, that will be a Gartley. And that harmonic pattern suggests, even though the high will be higher than B, okay, it won't be higher than X. So we get back to around 63.73. So why don't we just say somewhere around 64? It tanks. It's not my opinion, but it actually fits my fundamental outlook on the longer run. Oh, snap. But also, I believe, because I have the chart in my mind, we identified this as resistance like 6 weeks ago. We already know all of this. Now, the pattern doesn't know that. It's just a pattern. So if you were not bullish, that would be an interesting place to keep in mind, keep your eye on. Maybe that's bearishness later today, tomorrow, next week, whatever. If you want to be a bear, this should be something that you watch. If you were a bear, this would be a threat, okay? Because it's suggesting, well, it seems to have broken the secondary line, which may lead to some up. But then this says even the up will create the down. So on this 15-minute chart, we're getting the up. And then on the hourly chart, the up leads to a down, and I've already done all of that. Because remember, I did this for you. So what am I doing? I'm taking the higher time frame and putting these together to understand the price action. So a break to the up could lead to a reversal to the down. Oh, snap. Okay, and now let's go to daily. Okay, this chart is consolidation. Daily. So the way I have it drawn is I have support and I have resistance. So that's how the Wayne do. I've always been more horizontal as a trader than otherwise, right? So I'm always going to look at consolidation this way. So my version of consolidation is really range trading. Okay. And so I have it this way. Now, my outlook based on politics now. Okay, not the OECD report that came out, not pure fundamentals, not supply and demand, all this kind of stuff. What we call international political economics. I kind of have this as a floor and this kind of as a ceiling. It's intervention. So that's a whole different thing that's not on this chart, nor is it in the fundamentals. That's me as an economist taking in information that is not fundamental economic data and is not technical data. And now it shapes my bias. So what is it? How does this influence the way I think about this trade? Is this going to be an inverse head and shoulders like this? No, I don't think so. Normally I would, but there's two things: international political economics and seasonality. Okay, will prevent this from going up. I also know that OPEC did not increase production, and that was shocking to most people. And they're like, oh my God, that means oil prices will go up. Well, about 5 weeks ago, I told you that they were not going to increase production at the June meeting, but they will in July. So if I'm right, which I still don't know about July, but I was right about June, so I was not shocked, which means oil went up because people are like, oh my God, well, OPEC is not going to produce more. And we kind of priced that in. So now we've got to unprice it. So that pushes oil prices up because we didn't get an increase of supply. So oil prices go up. Uh-huh. Okay. But I think they misanalyzed it. We just happen to be not surprised. So what am I saying now? So we'll just call this OPEC analysis. Okay. That I would think about it this way. Now, if I felt like it could fall a lot further, why do I have a floor here? Well, government intervention, I think if we get to 55 and maybe even 50, then when we're in this zone, the government starts buying oil to support the fracking industry, but also to refill the strategic petroleum reserve at a cheap price. So Biden was selling oil when we were at 100, and we'll buy it back. Trump will buy it back at 50. Okay, so that's all my analysis. Okay, fundamentally, technically, and through the lens of international political economics. Are all of these important? Yeah. Yeah, sorry, dude. Yep. Yeah. Or you could just trade your MACD cross and get rich that way. Because that's what your favorite YouTube guru teaches you. Well, I'm not your favorite YouTube guru, but I will teach you technicals and fundamentals and trade management and risk management and psychological management, because that's real. Hey, do you want to do some Bitcoin? Bitcoin. I want to trade some Bitcoin. You like it? Are we on our way to 1 million? Or are we down to 100,000? Talk to me, Goose. How do you feel about Bitcoin? Love it? Hate it? Indifferent? Bullish? I know it's a tough question because you're like, bullish today or bullish this year? Yeah, exactly. Yeah, economics, we have long run, short run. Yeah. All right, Bitcoin, neutral. Technical trend, bearish. Wonder what is off. So this is 5, that's 4. Interesting. And then no output. Interesting. Something definitely glitched somewhere. But right now, is it technically bullish? No. June to July are not up months. You're like, but Wayne, it's got a big red candle. Bar. It's got a big bar. Well, I see it like that. So, not great at the moment. Okay, it was a 7. Now it's a 5. So, it's less bullish today. Although, this is a 5, but I think maybe that's the right one. I can't remember. Because it's not bullish. It's not a 5 here. And we're neutral here. But nonetheless, if you were a bull, it's less bullish today than it was yesterday. Good to know, right? Okay. And week over week, institutions hold less. There are outflows. Right, JP? JP will tell you, oh, there's outflows. We also covered that earlier today when I ran the sentiment radar, the squawk box, and it showed money coming out of the spot ETFs. Oh. Well, it might be up long term, but it ain't up today. You see, you might be a bull, but not today. It's a bad time. There's only price and time. Is this a bad price? Not if you think it's going to a million. Or even to 125, right? Yeah. But it's not the right time. And really, if you were going to kind of look really into the future, okay, May to June is not good. And in general, I would say that this could fall not just days, but weeks, months, maybe. We don't know. So the big question now that you're trying to ask yourself, are you going to 100,000 or 110? That's what you're trying to figure out today, right? All right, so we're neutral on this, but let's see what the patterns are saying. So we're looking at the 15-minute, the 30-minute, the hourly, the 4-hour, and the daily. We're looking at many different trending patterns, and we're looking at many different reversal patterns. And what do we see? Okay? An up with a down. So what we don't know, okay, is, and this comes down to your opinion, that is possible for you right here, right now, only on the 4-hour chart. Yeah, that's it. And maybe we can get to 110. If that doesn't work, we're not going to go to 110. Yeah. So the other pattern, the ABCD pattern, okay, remember, both of these exist. It's not that one is right and one is wrong. These are both patterns that exist, and somebody out there sees one but not the other, or vice versa. Okay, so if you're going to continue this trend, this is a 3-wave correction. What? Oh, do they offset each other? Yeah. So economically, we're neutral. Why? When you're neutral, you're going to get bullish and bearish patterns. That's why we're neutral. But look, I'm not saying you can't be a bull. I'm saying you need to know how to trade a bullish pattern. So you would kick off probably this moving average and take it north, and that's that. And then this pattern fails. No, not actually. This says we can get to approximately 106.5 and then do the continuation, the 3-wave correction. You believe in Elliott wave. This is saying up a little higher. Yeah. So you believe one or the other. Buy a dip, and even if that happens, you sell the rip. Oh my God, it's cool, right? So now you can be looking at it through a different kind of lens, and you're like, which one is happening? Okay, which one is happening? You can buy the dip at 105, take it up to 108. But if it fails, you get the heck out of the way and you do not buy the next dip. Because you're like, oh my God, we only made it to 106.5. We didn't even make it to 108. Yeah, well, now the next test is 100. Okay? So this is saying not only maybe 106, huh? But anyways, cool, right? Isn't that great? We have the technicals and fundamentals. We have seasonality. We have sentiment. How much do you read about Bitcoin? Do you read a lot about Bitcoin? Well, you can with us. All right, let's do gold. Talk to me, Goose. How do you feel about gold? Love it? Hate it? You're like, Wayne, why do we even cover gold? It's stupid. Oh, is it stupid? Okay, so imagine we were looking for 50 different patterns, meaning 10 patterns on 5 time frames. So that's not even enough. So let's make it 12 patterns on 5 time frames, right? So we're looking at 60 patterns. How long would it take you to look at those patterns? You have to go through every time frame and look for 12 patterns and see if they exist or not. Well, now it takes you 2 seconds. But I digress. Should you be a bull? Okay. Bullish. It's got a 5 and it went up to day 1. Oops. Scroll. There we go. That's good to know, right? I like it up there, right? The text up there. Okay. This metal is bullish with a score of 5, and that is correct. And today's score moved up 1, but that's not correct. Yeah, so this column is not counting one of these. So it's a table, right? So imagine you're programming this and you have to say, look at all the scores in this column and add them up. And somewhere it's missing a column. Or it doesn't know what to do with the 0. You see what I mean? So we have to go through every single one of these. Oh my God, to figure out what it's not counting. But we do know the change. So it looked at the current score versus the old score, and we do know. So now think of that. New minus old equals, right? So now you have a table for that. So now you know how to program this. So you have to have this score, the previous score, subtract them, and then this score. So you need 3 tables just to do this. Great. So this seems right. We have a 5. We're more bullish today on gold than we were yesterday. Isn't that nice? Cool. June, July is not an amazing time, but it's not a terrible time. We're bullish here. Okay. Yeah. Cool. Neat. Check this out. Institutional investors bought 234,000 gold contracts, increasing their position by 2%. Holy schnicker schnocker. So guess what? We're bullish. So we look over here, and now what? This is falling wedge, that's bearish. So this breakout might be an opportunity for you if you're a bull. Now you want to let it break, then you want to buy a dip and kick it off that moving average. On a 4-hour, it's already bullish, so you have 2 choices. Now, it has a down arrow. Down arrows don't mean sell. Down arrows means the current direction of this pattern. So you have 2 choices if you're a bull. Buy the moving average or buy the primary line at the bottom. So it's a 4-hour. It's been falling for 12 hours. Good. An amateur would keep selling something that's been falling for 12 hours. But a professional would say, I'm going to buy gold at a cheaper price. Why? I'm a bull. Cool. Now, on the daily, much less clear, isn't it? Lower highs and higher lows. And so we have a form of consolidation. But if this 240 works, then we have the up, the down, and then what? The primary line is going to continue. And our secondary line will adjust, and it's no longer a triangle breakout pattern. It's a trending pattern. Cool. And this pattern will just disappear, and the new pattern will show, and it'll tell you, oh, by the way, on the daily chart, it's a bullish pattern. Oh my God, it's so beautiful, isn't it? Yeah. Yeah. This one a lot less clear. A lot less clear, huh? Yeah, a lot less clear. But maybe a down to an up. Okay. So, right, we're trying to get out of this zone. Cool. And it says, look, if this is what it says, if this breakout is bullish, a bullish breakout, and that turns into at least a short-term trend based on the size of the triangle, which is just, again, a pattern rule. It's just, we don't know the future. It's just how to trade the pattern properly. It suggests the next move is 35.13, and it'll take a few days. Yeah. Cool. Kill. Golly gee whiz, Batman. This is beautiful, isn't it? Yeah. Beautiful. Cool. Trade with us, you get a spread rebate. Cash. Okay. Join our prop fund. You also get cash, PayPal to you, as a rebate for the cost of trader. So imagine you're a profitable trader. TRADARS should be free. The coaching should be free. The sentiment analysis should be free. The fundamentals should be free. The technical analysis should be free. And your spread should have a little rebate, a 3% cash back. Isn't that nice? Cash back and everything's free. Oh, and you get to keep 100% of your profits. And there's no test or exam. You're either a profitable trader or you're not. If you're not ready for prime time, then guess what? We just give you a spread rebate. Trade through us. The idea is you'll use RMT4, and I'll give you all the chart templates. Some people have paid $250 for the templates. I'll give them to you for free. Just sign up for our rebate program. Isn't that cool? Yeah. Yeah, totally.